Hello and welcome to Gradient's weekly roundup of key business and financial news in Sri Lanka for the week ending 11th February 2022. First, a look at the headlines. Finance Minister to revisit India, also seeks Australian support. Reserves fall 24% in January to 2.3 billion. Fuel prices up as Brent crude reaches 7-year high. 25% surcharge tax will Gazetteer to bring in 100 billion in revenue. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our top story this week, Basil Rajapaksa, Minister of Finance, will travel to India again next week to finalize financial support from India to Sri Lanka discussed in January. Under discussion is almost $2.4 billion worth of loans, credit lines, swaps and debt moratoriums. Sri Lankan government signed a $500 million credit line with the Export-Import Bank of India to purchase petroleum products in the latest round of financial aid from India. Meanwhile, Sri Lanka is seeking financial support from Australia. The Sunday Times newspaper, quoting Bandula Gunawardena, Minister of Trade, stated that the government is seeking a $200 million credit line from Australia. According to sources, the money is to be utilized to procure lentils, barley and other essential foods. This move follows Sri Lanka's attempts to seek Pakistan's support for a credit line of $200 million to purchase cement, rice and medicines last week. The minister further stated that assistance from Australia and Pakistan will be sufficient to import 6 months of essential goods. Sri Lanka's foreign currency reserves continue to trend lower, as at end January 2022, reserves declined to $2.4 billion from $3.1 billion a month earlier, down 24%. Reserves are now sufficient for about a month and a half of imports. The central bank continued to sell the country's gold reserves in a bid to boost foreign reserves. Despite funding and credit lines from regional countries, Sri Lanka continues to face significant economic challenges with a widening trade deficit and nearly $6.8 billion of foreign currency denominated loan obligations to be fulfilled in 2022. On Monday, Lanka Indian Oil Corporation increased its retail selling price for Lanka Auto Diesel by 3 rupees per litre and petrol octane 92 by 7 rupees a litre. Significant increases in Brent crude oil prices from $72 to $92 per barrel since the last price revision in December 2021 was cited as a reason for upward price revision. According to LIOC, at current international prices, the company loses 42 rupees per litre of diesel and 10 rupees per litre of petrol. Later in the week, Dallas Alhak Peruma, Cabinet co-spokesman, alluded that there could be a price hike in Ceylon Petroleum Corporation as a result of high world market prices and the price hike by LIOC. The surcharge tax bill imposing a retrospective one-time tax of 25% on persons and companies with a taxable income of over 2 billion rupees for the financial year 2021 was gazetted in Parliament. The tax aims to raise about 100 billion rupees. According to the Daily FT, the private sector expresses disagreement, considers the tax to be unethical and notes that the country is facing global ridicule of being a nation resorting to tax-retained earnings or reserves. It is also noted such action is against international best accounting standards and practices which Sri Lankan firms comply with. Moreover, they claimed it does not consider capital employed, particularly debt, to earn such profit or the return on investment. In other news this week, 22,412 tourists arrived in the country during the first week of February. As such, the cumulative figure for 2022 is 104,739. The main source market was Russia, followed by India and the UK. Previously, tourist arrivals targeted for 2022 was revised down to 1.1 million from 2.3 million, accounting for the surge in the Omicron variant in major source markets. Further, FlyDubai started operating 3 daily flights between Dubai and Colombo 6 days a week. This follows Emirates in January adding 5 more flights to Sri Lanka, offering 26 weekly flights to Colombo. Moreover, the government waived off the annual registration fee of all tourist establishments and individuals listed under the SLTDA for 2022, extending the relief initiated in 2020. According to latest data published by Lanka Property Web's House Price Index, overall selling prices of houses and apartments had increased by 22.5% and 17.7% respectively in the fourth quarter of 2021 from a year earlier, an all-time high for the indices. A growing trend of vertical living in urban areas and increasing construction costs were cited as reasons for the rise in prices. However, residential land prices in the Western Province, excluding Colombo, declined 17.3%, while prices in the Central Province and Southern Province grew 22.6% and 19.4% respectively. Land prices in the Colombo city increased 3.5% year-on-year, whilst those in the Northern Province grew a significant 45.1%. Sri Lanka's much-heralded cinnamon industry received a boost, with the European Union Commission granting geographical indication certification status to Ceylon cinnamon. Such status helps to differentiate Ceylon cinnamon in the EU market, serving as a competitive advantage to increase market differentiation, increase revenue, and also allowing for a premium price. According to the Export Development Board, this will increase exports, improve income, and generate more employment opportunities across the cinnamon value chain. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. Sri Lanka stock market slipped on Tuesday to its lowest in 2022 on a government proposal to impose a 25% surcharge on groups, companies, and partnerships earning over 2 billion rupees in taxable income for financial year 2021. Foreign sales persisted with 3.5 billion recorded in 2022, whereas net foreign outflows were over 50 billion rupees in 2021. And here's how the rupee performed against the dollar this week. In other market news, the Colombo Stock Exchange is in the process of revisiting the listing rules governing the basis of allotment of shares in an IPO. This is to ensure greater transparency and fairness in allotting shares to applicants by the issuers. The proposed framework is now available on the website for public comments. According to Business Daily Africa, Sri Lanka's LOLC Holdings was given the go-ahead by the Kenyan authorities to purchase Kenya-based Key Microfinance Bank. LOLC is intending to gain 73.29% stake in the microlender for 422 million rupees through its subsidiary LOLC Mauritius Holdings Limited. The go-ahead is pursuant to the subsidiary being made exempt from the country's Microfinance Act, which restricts an ownership limit of 25% for 4 years. And with that, we wind up for this week. Until we see you again next time, thank you for joining.